You know, the further I get into this trading thing, the more I realize just how much you got to trust your plan, trust your levels, and ultimately not freak out when a trade seems like it might potentially go against you. What's up, everybody? This is Josh from Red Shorts Trades. I want to go over a trade that I did today, and I think it's going to expose a few things. So there was a really great trade that I had on the Qs, and this was after I had a few bad trades. We ended up going just under negative on the day. We were pretty close to break even just based on the two trades. And obviously there was trades that I shouldn't have taken, that I got too aggressive, too eager on, and then there was a trade that honestly, if I just waited for that trade, it would have manifested beautifully into the win that I had today. And effectively, it was a trade on the Qs. We had a beautiful break and retest strategy, which is the only thing I look for, and it was actually off of a key level. Now, there's several different entries that I look for when it comes to the break and retest strategy. Whether it's the opening range break, which is a break and retest off the 1 minute candle or the 5 minute opening candle, depending on how aggressive the move is or if there's news on the day, I'll be taking a look at that. I also mark out pre-market high, pre-market low, prior day high, prior day low, because all of those are points of liquidity where a potential entry could sit. Now, vast majority of the time, I'm looking for a 5 minute opening range break, but every now and then the opening range break is between some specific levels, and it might be too close to a level for me to really think about taking it. But some of the more key levels that are higher opportunity, but they can also work against you in a higher way, in a bigger way, are the higher time frame levels. If I'm looking at a level that's on a 1 hour or 4 hour chart, sometimes you might get that break and retest initially where you think it's retesting, but on the higher time frame chart, it actually is looking like it's rejecting it. Today was a case where it actually worked out really, really nicely. I also had a case yesterday where the same thing worked out really nicely, a break and retest of a higher time frame level. So without further ado, let's jump into the chart on the QQQ trade that I had today. So here we are on the QQQ chart. As you can see, I'm on the 1 hour time frame. I'm going to jump over to the 4 hour just so you can see what I was seeing and where ultimately my entries that I was looking at were. If you go back here to July, we actually had this level that we ended up breaking, retesting here, and then it pushed up further. This is that 490 level. We came back and we retested it on the 11th of July and also on the pre-market of the following day on the 12th, pushed off it again. And we saw it got turned into, again, support that pushed up to pushed higher, and then we had it break through. And then in this pre-market candle had a really nice wick rejection to push it to the downside, using it as a level of resistance turned support. So we knew it was a key level on the higher time frame based on that. If you move it back over here, we saw it again get turned into something that broke through pre-market, but then pushed straight past. And then we saw this rejection point here on the 4 hour time frame. So we had this on our chart as a area that we wanted to watch. You could see on the 26th of September, we were holding that level here, broke above it, broke below it again. So this is definitely on our list after that 486 level break. Yesterday, we had the really nice break and retest, beautiful textbook break and retest of that 486 level. It actually ended up going up and tapping our 190 level here, which was a pretty strong signal that we were getting some reaction around that 490 level. So again, a really powerful level for us to look at. So as we entered into the day, there were a few levels I have marked out. My yellow lines here, these are my pre-market levels. And then I have my white lines here, which are my opening 5 minute candle levels. So let's go and jump into the 5 minute chart and see what we saw. So we saw the candle chart here wicking around and staying within this 5 minute range. Now, as you can see, the pre-market level is too close to the 5 minute level for me to kind of potentially like take a long off the 5 minute. There's just some things that you want to make sure are at play. And when levels are this close, you're going to use one or the other level, or you're going to use the zone in between as kind of a demand zone. So we ended up not using this as either, but we decided to just wait and see. And when I say we, I mean I decided to wait and see what we were going to get. So obviously I don't trade on the 5 minute chart. I trade on the 1 minute chart. The 5 minute chart's for me marking out that opening 5 minute high and low, and then also to have higher time frame confirmations of momentum. So I'll toggle between 1 and 5 minutes when I'm in the trade just to make sure I'm not seeing something materialize on the 5 minute that I'm not seeing on the 1 minute, or vice versa. I want to make sure there's confluence between the two time frames. So jumping over to the 1 minute chart, let's take a look at what we saw here. Again, we were waiting for that 490 level. Now, what you saw here, if we go back to the prior day, this purple line here is my prior day high. Now, there was confluence between the prior day high, which is a point of liquidity, and the 490 level, which is a higher time frame point of liquidity. So having those right next to each other is actually something that'll help give me even more confidence that this is a higher probability setup. We saw it already tap into it, saw rejection yesterday. Now we come into the day, and right around 10 o'clock Eastern, we saw it break above the 490 level, not with some simple rejection, by the way. We saw this first initial candle get wildly rejected, and then we had a big push down, but then we quickly retraced up, showing the buyers were in control, and we had to wait for the retest. And I wanted some significant displacement, meaning we're separating the distance between the 490 level and ultimately where the top is by a good portion. I typically try and stay away from immediate retests. So if we have a candle that breaks out above a level and then it comes back and retests it on the next candle, I try and stay away from those because those aren't often consistent with having enough displacement for me to have ultimately a profit target to be able to sit with. So I waited for it to come back down. There were a few instances where it was tempting to kind of get in early, but I was disciplined on it, waited for my trade to come. For example, this candle coming all the way down here, not quite getting into the level to retest it, but then having it wick the way that it did. This was a tempting spot, but obviously it would have been too soon, and the entry point would have been way too high for my stop loss. So we ended up waiting. We got this beautiful candle down here. I actually did end up entering the trade a little early. We got this candle here and then this guy right here, which I used as my entry point. It was close enough on those wicks. It was 2 cents over the 490 level that I was like, maybe it's not actually going to tap into it. Realistically, I could have just waited for this big candle here at the 1047 mark because it went straight through the level, wicked below the level, and then ultimately held price right at that 490 level. This would have been the more ideal entry point. So I got in a little bit early, ended up holding the trade because where I set my stop loss, I set it at the break of structure. Where was the break of structure? It was this prior low before this rip up. So this prior low was created right here, as you can see. This is where I set my stop loss. So all the noise that potentially is going to exist between this 490 level and this 489.59, this is all noise. I'm not going to worry about it. And it's tempting to, again, stop out when you have things breaking below. But what I'm really trying to work on is making sure I hold my trades, trust my entries, and just let the trade play out. Good or bad, let the trade play out. And so I've been sizing down a little bit to be able to get more comfortable with doing it, which I think is really important to do, is make sure you're taking smaller lot sizes as you're figuring out your plan and being able to trade consistently, because consistency in terms of execution across your trading plan is super important to make sure that you're getting the kind of risk to reward that you need and ultimately making sure the probabilities work in your favor. So I had this guy break down. We ended up retesting this after this first candle break and this wick hold. This actually gave me a lot more confidence. So I actually ended up cost averaging down. I added in another lot to my size here to be able to bring the cost average down. And then we saw some dancing around here, but for the most part, it was weak to the downside. We're still seeing a lot of strength come in. And before you know it, we started cooking after about 10 minutes here. And then we started blitzing up here, went straight through my profit target. And I ended up holding a trailer. I exited after this 1 to 2. So I always target a 1 to 2 risk to reward ratio. I ended up this time, one of the other things I'm trying to work on is trying to, if I can avoid it, not just taking profits at high of day, even though a lot of times I do. I find that when I take profits at high of day, oftentimes it continues to go higher. And I actually end up losing out on a little bit of profit. So I'm trying to, on these higher probability setups, not worry too much about taking profit at high day, just wait for my 1 to 2 risk to reward ratio. Sliced right through, took half off here, and then things started to dance around here. I took another one off here, and then I think I ended the trade right about here at this push. Actually, I think I set my stop loss. I moved my stop loss up and had an automatic stop loss to get me out of the trade. And I think one of these wicks ended up wicking me out of my final position. But obviously I could have held and it went up. I had a 192 level as well. That was part of my profit target that it would have ended up hitting if I just held it. And there was a really nice move continuation up. So that's another thing I need to work on is how do I find a good way to hold my trailers? Conceivably, I had this demand zone drawn, which I was waiting for it to come back and retest, and it never did. And so it kept creating these higher highs, higher lows. And I think I could have used that in hindsight to use that as my kind of manual stop loss. If it broke below one of these demand zones, for example, up here, if it broke below this demand zone, then it'd be an opportunity to get out like somewhere over here, but then keep moving it up with it. So I could have trailed this a bit better. Overall, really nice trade. I think the contracts by the time I got out were up 40 to 50%. So ended up getting a really nice trade out of this. The key takeaway here, though, is making sure that you're trusting your levels. This was a higher time frame level. So I was playing a higher profit probability setup from a higher time frame level. My executions were on the 1 minute time frame. The 5 minute time frame, if we flip over to the 5 minute chart, I did take a look at the 5 minute time frame to see how things were shaping up. Let me find it again here. And one other thing that gave me confidence was this candle here at the 1050 candle. This on the higher time frame for the 5 minute time frame, it held price above 490. Again, another confluence to help give me confidence in the trade. But overall, really nice trade. I wish this was the only trade I took this day and I wouldn't be pretty much break even on the day. But you live and learn. That's what I'm learning. Trust your levels on the higher time frame. Don't freak out and don't profit manage. Have a plan, trade the plan. You want to plan your trade and you want to trade your plan. Plan your trade your plan, trust your levels, and make sure you're holding through to the target that you set for yourself. And that is how you're going to let the probabilities work in your favor. That's what I'm continuing to learn. I hope this example is helpful to you. If it is, definitely drop a like. Give that subscribe button a nice smash so you can continue to get more content from the channel. And if you have some comments or commentary or helpful tips, honestly, if you want to call me out for not doing this as technically as I should, go for it. Drop them in the comments. Love to engage and love to learn more alongside you as we continue to share examples and document the trading journey that I'm on. So I hope everybody's doing well. We'll talk to you soon. Thanks.